Let's get more on those Scotia earnings. Profit was up in the fourth quarter on an adjusted basis, but it missed analyst expectations. And the company did set aside $1.3 billion in provisions for credit losses. Let's bring in Greg Taylor, Chief Investment Officer at Purpose Investments. Thanks very much indeed.
Thanks,
we just heard from Christine Dobby that a lot of this miss was apparently a higher than expected tax rate at Scotiabank.
Yeah, other than that, the quarter seemed pretty much in line. There wasn't much miss on the revenue. The expenses were in line. The tax issue was different. CE1 ratios were down a little bit because they had to account for the acquisition of the U.S. bank.
Okay.
But net, this was basically an inline quarter. And I think the stock reaction we're seeing today is more a result of just how strong the move's been in the last few months, more than anything nefarious we're seeing in the numbers.
Yeah, because you're saying that the stock had been up nearly 30% from the low in August.
Yeah, and you have to remember, looking back a few years, like Scotiabank has been one of these banks that really hasn't done that much. It's been a bank that was basically trading at the exact same level it was for the last 10 years. And we're starting to see a turnaround going with the new CEO 1 year into their reign. And people have been trying to figure out just how this turnaround is going to go, shifting some of those assets from Latin America back to the U.S. and to Canada. And people were really starting to buy into this change this summer. We started to see more analysts come out with positive notes. We got some analyst upgrades. I don't think there was a buy on Scotia for a number of years, and suddenly all the analysts started to flip. And with that, we got a pretty good bounce in the stock and up around 30% since those August lows. And I think that's the setup that people had. We had a big rebound in the stock price heading into earnings. Earnings were okay, but we're starting to see a little bit of a give back. But this isn't anything I'm too worried about.
And they have put a toe into the States now, haven't they, with that acquisition of a chunk of Key Corp of Ohio?
Yeah, looking at the Canadian banks, there's been different strategies of how people have gone in the U.S., either in a bigger way or smaller. And Scotia really had been one of the banks that hadn't done too much in the U.S. And I think that was an effort from the board more recently and the new CEO to say, we've got to pivot away from Latin America and add more, to become more of a NAFTA bank and have more of a presence in the U.S. So they announced that 15% acquisition of Key Corp this summer, and the first 5% are done. And I think that's probably going to shape up to be a pretty good, attractive valuation, gets them into the Midwest, and I think something that they can build off of and strengthen the franchise going forward. It
seems unusual, though. I think of Canadian banks, when they go into the States, they actually buy another bank, but they're just taking a stake in this lender.
Yeah, I think Scotia used to be known as the BNS was the bank of no surprises, and I think they're going back to their roots of a cautious approach, getting in with a minority equity stake and trying to get a lay of the land and then build off of that.
Expenses are a focus, well, at any time for shareholders, but was there anything jumping out for you with the cost base here?
No, I think they did a decent job controlling the expenses. Certainly we know the Canadian economy hasn't been as robust as the American economy, and the banks have had to work on keeping their earnings going by focusing on the bottom line. The other big thing of note in Canada is the capital markets just really have not been strong. That's a big part of all bank earnings, and there hasn't been a lot of deals, there hasn't been a lot of equity issuances, and there's barely been a lack of IPOs. And when you compare that to other years and other banks in the U.S., that's been a big part of the earnings growth, and we've been lacking that in Canada across all the banks, and Scotia in particular.
Just regular equity financings, let alone IPOs, have been fairly
It's been quiet, and hopefully as these commodity prices start going, we've got some more deal making, and there's also a lot of optimism with the U.S. opening up. There could be a wave of M&A coming in 2025, so maybe some optimism for 2025 for all the banks in Scotia, and see what they can do on the capital market side.
I wonder, international investors looking at Canada, are they going to be wary for the next while with President-elect Trump's threats to slap on tariffs?
Well, I think they have to, and that goes to say that there's already been the case that it's been really a market that a lot of international investors haven't focused on in Canada, that they've been more focusing on the growth in the U.S. And Canada hasn't been the most business-friendly from an environment point of view for the last number of years. So I think international investors have really de-emphasized Canada for the last number of years, but things are starting to turn a little bit. The commodity market is starting to shape up. People are starting to say, well, maybe we can look over to the next government. Maybe that'll be a little more business friendly. So international investors are starting to sharpen their pencils and do more work in Canada. But you're right, with President Trump coming back into office, we've already saw last week the midnight tweets about tariffs, and that definitely is going to be a bit of a caveat and probably keep some international investors on the sidelines.